In today's video, you'll find some of the absolute best stocks to invest in right now in this crazy market. So you'll find 3 of the most undervalued stocks to buy in March of 2025. Without losing too much time, let's take a look at the first pick on this list. In first place, we find one of the world's largest companies which has took a real slap in the face lately, which is the American business Alphabet with the ticker GOOGL. By being down more than 15% since 1 month, it is fair to say that Google is currently facing a rough period. The main reason that can explain this downtrend momentum came in their latest earnings report that were reported on the 4th of February 2025. Indeed, despite being able to slightly outperform the analyst expectations in terms of the earnings per share, Alphabet shares fell sharply following the day after the earnings report as a response from the investor to the Google parent's weaker than expected revenue numbers, mainly related to lower cloud revenue, as well as big AI spending plans that have been forecast for 2025. Indeed, in this latest earnings report, Alphabet has said that it anticipates investing about $75 billion in capital expenditures in 2025 in order to expand their artificial intelligence infrastructure. The numbers were quite higher compared to what the analysts were forecasting, which highlights a problem concerning the investors, which is about when does this investment will pay off. Another cause that has been putting Google in a bad position lately is about all the antitrust lawsuits that they are currently facing. Since the past couple of years, the Department of Justice in the United States filed multiple lawsuits against Google for illegally monopolizing the search and advertising markets. This is explained by the fact that at the moment, Google currently owns close to 90% of the total search engine market. But at the end of the day, all of these news that have put Google on a certain decline in terms of its total value has made the stock's value currently quite below its 200 days moving average, which could indicate more potential entry points by different investors in the long term, which could lead to a potential re-increase of the value of this company in the mid to long term. So clearly, in my opinion, there has been a massive overselling of this stock over the past couple of weeks. At the moment, Google is one of the most diversified tech companies that is offering multiple types of products and services to their customers. For example, their famous YouTube, Google Chrome, Gmail, Google Drive, Google Phones, Waze, and way more, which is obviously one of the main reasons behind Google's success over the years, where they are now generating close to $100 billion per quarter in revenue. Furthermore, the latest dip that we've seen in the valuation of Google is more of a short-term problem than a long-term one, because they've still been able to report some excellent financial results lately, where we've seen their main indicators being able to grow. And at the end of the day, in terms of their forecast for the AI spendings, obviously it can be readjusted throughout time to be able to meet what are the investors' objectives. So personally, I am not too concerned about what has been going on lately and why this company has lost that much value over the past couple of weeks. Plus, with a current P ratio of only about 20, it is by far one of the most undervalued tech companies at the moment on this crazy market. And it is why personally I believe that Alphabet remains one of the best options for you if you are looking for long-term potential capital appreciation. Now, for the second company on this list, we'll be going into the Canadian market, into one of the big 5 Canadian banks, which is the Bank of Nova Scotia with the ticker BNS. With the multiple threats made by the US president about potentially imposing a tariff on Canadian companies, this means that these businesses will need to find a way to diversify their business model to not be only relying on the US economy. It is why, on that regard, BNS might be pretty interesting for you, because it is currently Canada's most international bank with its 25 million global clients in 50 countries, exceeding its Canadian customer base of 11 million customers. So it means that they have about 2 times more customers outside of Canada than they have in their own country. Plus, it is important for you to understand that amongst those 25 million customers, a big portion of it are directly located in different South American countries. Add to this, a few days ago, alongside the other big Canadian banks, BNS has been reporting its latest financial results, which were quite some good news for the different investors. While the stock has been on a certain downtrend momentum over the past 3 years, these latest financial results could become the turnaround point for this big Canadian bank by being able to surpass the analysts' predictions for both the earnings per share and their total quarterly revenue for the past quarter. BNS is showing that they are able to restart to achieve some great financial results. In this latest earnings report, we've notably been able to see that they've been able to increase their total net revenue by over 11% year over year. And even if their total expenses have been massively increasing by about 37% year over year, their total net income has been slightly able to increase compared to the same period last year, where it is up to $2.3 billion. The only bad news that I've personally seen from their latest earnings report came in terms of their provision for credit losses. So basically, what are the provision or the forecasts made by the bank in terms of the money that they could potentially lose in terms of the credit risk? For example, if some people decide to buy a house and have a mortgage on it, it means that if they are not able to pay it back, it will make that the bank will lose a certain amount of money, and it is why the bank is making a certain provision in case that this could happen. In the case of BNS, we've seen that our provision for credit losses ratio has been increasing by about 10 basis points year over year. However, this is quite normal for all the big Canadian banks at the moment, with the multiple hikes of the policy rate that we've seen over the past couple of years, which has obviously led to higher interest payments on the loan of their different customers. Another important aspect to understand about these types of businesses is to know what is the dividend income that they are offering. Over the past quarter, we've seen that the dividend has stayed unchanged compared to what it was 1 year ago, to about $1.06 per share per quarter, which is equal to about 6% of annual dividend yield. And so, with a price to earnings ratio below 15 at the moment, this Canadian dividend company might be pretty interesting for you if you are looking for great passive income from it. Finally, third and last on my list is the American business Arista with the ticker ANET. This business might be quite unknown for most of you guys, but it actually specializes in networking solutions for data centers. So it is one of the best companies in the world when it comes to building switches and security products for data centers, cloud computing, and other environments, meaning that they create the physical equipment that allows devices to communicate and share data on a network. These products might not seem like it, but they are absolute essential for all the big companies in the world that are looking to store their data somewhere, and it is where Arista is pretty useful for them. It is no wonder why their products and services are well used by multiple types of organizations such as data centers, financial institutions, and government agencies. Their biggest two clients by far are Meta and Microsoft, but they also have other well-known clients such as Oracle, Amazon, and Alphabet. These crucial partnerships have been one of the main reasons why this company has been so much successful in 2024. Throughout the past year, we've notably been able to see that the company has been able to grow their total revenue by about 19% year over year, up to $7 billion. And only in their latest earnings report, we've seen that they've been able to report some quarterly revenue slightly below $2 billion, or an increase of about 6% year over year. This can be justified by multiple different factors, such as the fact that Meta has deployed one of Arista products that is used for their latest Ethernet-based AI cluster, as well as a new partnership that has been established in June of last year with the giant semiconductor company NVIDIA. In terms of their financials, this has also made them significantly increase their operating cash flow in 2024 compared to what they were in 2023, which has also led to an important increase in the total shareholders' equity at the end of 2024. However, with the partners NVIDIA poor earnings report that have been reported at the beginning of 2025. This has had a ripple effect on the total value of this company that has been on a certain downtrend lately. Nevertheless, at the moment, it remains the third largest networking hardware companies in terms of valuation, just behind Palo Alto and Cisco. The main difference between Arista and our big competitor Cisco is the fact that Arista is a quite younger company that is about 2 times less older compared to Cisco, meaning obviously that it has less market share, but at the same time they have a great cost advantage with simplified licensing and more affordable switches to their customers. So even if Arista is quite younger compared to Cisco, in the future they might find a way to surpass them, especially knowing that the big founders of this company come from their competition. The current dip that we are seeing concerning this company might represent a certain long-term possibility and opportunity for investors that are believing in these types of smaller tech companies. So there you have it. Those are 3 great companies to keep on your watch list for the month of March of 2025. But now on your side, if you don't want to have the trouble to pick companies one by one, and if you're looking to find and to invest in some of the best exchange trade funds on the market, well, check out the video. That's gonna be right over here, and I will see you soon. Peace.